In this video, we'll look at Pionex grid trading bots. Pionex is one of the most popular crypto bot trading platforms, and grid trading bots are the most popular type of bot amongst all platforms. I've had 2 grid trading bots running for over 12 months for this video, and so we're going to look at how they perform in the real world and if they hold up to what they say they do, and I'll leave timestamps for everything down in the description. If you are looking for Pionex specifically, I'll leave a link below. They may give deposit and trading bonuses if you're new. Also, some specific videos on all of these different type of bots that you can use, because depending on the outcome that you want, all of these bots are going to have a specific use case. So you can look at those videos for much more in-depth guides. Pionex actually have good guides on their platform as well that go through the specifics. What we're going to do in this video is look at the real world results of a grid trading bot, which is the most popular type of bot across all crypto exchanges. On Pionex specifically, you can copy the successful parameters of some grid bots that have been trading recently, or you can customize your own. This is going to be the same on other platforms as well. What is a grid trading bot, and do you want to copy strategies or do you actually want to customize your own? Well, that depends on you and how long you want the bot open. At its core, a grid trading bot simply just buys and sells at specific parameters, a buy low and a sell high, maybe 1% difference. So you buy at this price and you sell at that price, and the bot just refreshes buys and sells the entire time between an upper and lower bound, right? So the whole point of a grid bot is to essentially, take the volatility of a price and just buy, sell the entire time. So you have, an upper price and a lower price, and the bot just sits there. If the price is in between these, buying and selling, so the price moves up 1% and down 1%, buy, sell, buy, sell, buy, sell. So really what the bot is trying to do is earn some yield through trading, right? So you trade and you take the dollar profits all of the time. So the benefits of this is that you have an active bot in the market, which is, you could say, scalping, I guess, or just market making with buys and sells the entire time. Now that's obviously something you could never do 24/7. The downside of this is potentially over trading and potentially just underperforming a price that just goes up. So we're going to look at all of the different strategies here and how the bots have performed in relation to those as well. And I've got all of the data. Really, the 2 main parameters for any grid bot is the price range that you want the bot to trade within and the amount of grids. This is going to affect the performance of the bot. So we'll look at how my long-term bots have done in terms of their performance. But what you really want to look at is, let's go to customize grid. You have a lower and upper limit. This is going to be the price that you think it trades within throughout the time that you have the bot running. So the price of Bitcoin right now is 26. If you're going to run the bot for maybe 6 months, it would be quite likely that it may trade between this upper and lower bound. If you're going to trade for 10 years, then the upper and lower bound is going to be different. But this is where the money that you put into the bot is going to trade between. So if the bot trades outside of this, the bot stops trading and working essentially. Now on Pionex, I think you can actually edit bot parameters to change that, or you can just simply close the bot and start a new one. But the important thing is, how concentrated is your liquidity? What we can see here, if we go to copy strategy, the long-term moon bot, this is going to be way more grids and a much wider price range. It's kind of a long-term bot where you just leave it running for a long time. If we go to parameters here, you can see that the price range is 10,000 to 100,000. It's a very, very wide price range, and there's 500 grids. And so you're really trying to run it for a very long time, and the money that you put in is going to be spread quite thinly. And so what you can see here is you do need a larger amount to invest. Otherwise, it's just going to be too small. If you go back and then the 7-day grid bot, start copying here, and then we'll look at the parameters. The price range is much closer, right? 23 to 28,000. So really you're taking advantage of volatility short term and putting more money into each trade. And there's actually fewer grids here, although the price is a lot narrower as well. So that does matter. It matters how long you think the bot is going to run for and the price that you think it's going to trade within over the time of the bot. We'll go over the Bitcoin bot first then. So as you can see, this is what has happened throughout the time. I started the bot in March 2022. So the 15th of March 2022, when Bitcoin was 39,400. This is the price action of Bitcoin over that time. you know, the real sell-off in Bitcoin, that real bear market there. It's traded all throughout this, and then, you know, half of the recovery right here, where Bitcoin has gone up from 15 up to, you know, 30,000, where it topped out at. All of this market. So Bitcoin itself is way down from where I started the bot. So how has the bot performed? We can see here that if I just put in the amount of the bot in, you know, at the same date, which is the 15th of March, I put in, as you can see here, $1,250. And so the performance is around about -28 for the bot, but it's -34 for lump sum. So if I put in 1,200 on the 15th of March 2022, I'd be down 34% just in BTC. The grid bot is down 28%, and so it's outperformed the lump sum investing by 6%. The reason for this, two reasons in my opinion. Firstly, it has been able to trade grids and make profits out of them. You can see right here that the grid profit is $38, which, you know, as a percentage is around 3%. So it's actually making 3%, you know, dollar profits from trading those grids. And also, because it's been a bear market, some of the grids were yet to trade at this price. So as the price has come down, essentially what the bot has been doing is, you know, buying BTC at a lower price than a lump sum if we'd have bought it all up here. So the bear market has been a little bit better in terms of buying BTC at these prices, but it's still, you know, not working miracles. It's still making a loss, although it's outperforming a lump sum investment there. As an investor, I think the main thing is it worth it to make 3% yield on Bitcoin by putting some dollars onto a crypto exchange? I guess that's going to be up to the investor, but, you know, it's done what it said it was going to do, which is trade grids and make a profit from those grids. And it has outperformed the lump sum during this bear market anyway. What I also want to look at, though, is dollar cost averaging Bitcoin during this bear market. So what we can see is, and these are rough figures, but they work out fairly well, $1,250 invested through 66 investments. So that's, you know, just over a year and 2 months. Similar type of amount of dollars that you've put into this strategy, which is dollar cost averaging. So buying around $19 worth of Bitcoin every week during the bear market. You can see that the cost average profit is $130 and your return on investment is 10%. This is actually a real profit. So dollar cost averaging has outperformed the bot and it's outperformed lump sum investing. As you can see here, dollar cost averaging, you're actually in a profit 10% rather than just an outperformance of lump sum. This has worked during this bear market, and this is just timing, because what we've had is dollar cost averaging through all of these drawdowns, and we've had a recovery. If we were in a bull market, dollar cost averaging would not have outperformed lump sum because the price would just be higher. And so we haven't benefited from that. So it really does matter when you're trading as to, you know, what strategy that you're using. But as the strategies go, dollar cost averaging during a bear market and buying at lower prices does work out, of course, if we accept or presume that the price is going to start rising again. But dollar cost averaging has outperformed any other strategy. It's actually up in nominal terms. You made a 10% profit. How about for the Ethereum bot? I started this about a month after the Bitcoin bot. Again, Ethereum is way higher. Started this on the 19th of April 2022. Ethereum was trading at $3,000 at the time that I started this. Again, the entire bear market just ripped through the price, and then we've recovered from here. So the Ethereum bot, if we click on this one, you can see again it's in a loss by 34%. The grid profits are around 3%, 2.84%. So if we look at the grid bot, the lump sum investment is down 43%, and the grid bot is down 34%, and so the outperformance is 9%. So again, the grid bot is doing exactly what it said it would, which is buy grids, you know, buy and sell grids, make 2.8% from the grid profits, around $35 on a $1,250 investment. But again, it's not worked miracles. It has outperformed by a lump sum, but it's still down. Dollar cost averaging Ethereum during this time has also been the best strategy. You can see that here. Again, a rough estimate of what it would take to dollar cost average here started on the 19th of April and finishing as of making this video. That would be around $20 per week, total invested around $1,220. And what we can see here is that the value of your ETH is around $1,360. You've actually made an 11 or 12% profit, which is $140. So that profit there is, an actual return on investment of around 12%. So I've written that down here. Dollar cost average is 12%. So not only has it outperformed lump sum, but the dollar cost average has actually seen our portfolio in an actual profit through dollar cost averaging during this bear market. Where it seems the bots do outperform is the way that they trade volatility, which is exactly what they're supposed to do. So if you get into a crypto, at one price and then get out at exactly the same price 6 months later, if you traded that lump sum, you would have made no money. But with a bot, you trade that volatility and take out some of that yield out of the market during that time. Now, other strategies may work, but it all depends on the price action. If you're buying lower in bigger amounts and lump sums, DCA seems to work. During an uptrend, DCA may underperform lump sum, and the trading bot may also outperform if it's trading some of that volatility as well. So it really depends if the bots are actually going to be the best strategy, and it depends on the price action of the assets. If you want to check out Pionex, I'll leave the link down below in the description. Some other helpful videos I'll leave down there as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.